Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 21st, 2019, and this is the weekly market update. So this week in the reality check, I want to talk about last week's attack on the Saudi oil facilities. You know, last week after the market opened, oil initially shot up about 15%. And then declined, finished the week up about 6%. And I think a lot of commentators or a lot of people were kind of like, well, if this was such a big deal, how come oil prices didn't go up higher? The world must be awash in oil, and this isn't, I guess this really isn't a big deal. And I've spent all week kind of looking at this because I'm interested in this. I have read a couple of authors. One's William Lind, he's an American, and another one, an Israeli author. These are on military issues, Martin Van Cleveland, I think that's how you say his name. And they are authors and have a lot of research and discussion into what's called fourth generation or asymmetrical warfare. Now, we talk about asymmetrical investing where we have a lot of upside but very little downside. But what's asymmetrical warfare, fourth generation warfare? Well, asymmetrical warfare is what these smaller countries or organized groups, if you want to call them terrorist groups, whatever, the type of warfare they engage in because they do not have F-35 fighters and naval fleets and things of this nature. So this particular attack that happened on this Saudi oil field, which allegedly was launched by the Houthi Rebels in Yemen, but it also appears that maybe some of the drones or rockets came from southern Iraq. We're not sure still. That would be an example of fourth generation warfare, using drones, using things that can skirt the air defenses, the radar defenses, the electronic warfare defenses that the Saudis have in place. And as we can see, it was very successful. This particular facility was a crude processing facility, required after you bring the oil out of the ground to remove the various constituents so that the oil can be sold. And it was very precise based on the photos that were shown. The attackers attacked various towers, separation towers and tanks, and took the facility down. Now, we're getting all kinds of reports about the length of time it's going to take to bring the facilities back and all these things. I think that's a secondary issue to what the primary issue is. And the primary issue, as I thought about this week, to my mind, and how it is affecting our potential investments, is what a paper tiger Saudi Arabia really is. I mean, Saudi Arabia is kind of a joke of a country. It's, House of Saud, some Bedouin tribesmen. It's kind of the, Jethro's and Beverly Hillbillies story. They found a bunch of oil and now they're real wealthy. But from what I've read about the Saudi military and the kingdom itself, it's being kind of, it's like paper tiger. And this particular attack exposes that. Now, I'm not going to get into the whole history of what's going on here, but basically Saudi Arabia has been involved with a war with the Houthis in Yemen for years. These people in Yemen are Shiites, a particular sect of Shiite Islam. Obviously, the Saudis are the people that control the House of Saud, are Sunni Wahhabi practitioners. These people have been fighting each other for 1,000 years. Iran obviously is the largest Shiite population in the Middle East, so they support the Houthis to a certain extent. They advise them. I'm quite sure that they supply them with technology, probably intelligence, and this is what's going to happen. This is not the first attack. This is just the most successful attack. These Yemenis or rebels or different constituents that have been attacking Saudi Arabia, this is not the first attack. And the attacks are getting more and more precise and better and better. And what was interesting is that there was no countermeasures. All of the air defenses are pointed towards Iran, and they were able to slip in the back door and create this turmoil in Saudi Arabia. And I'm not sure, you know, if the Saudis can put in defenses that can stop, you know, these continued attacks. Now, the success is going to beget more success. You know, one of the results of this is that the United Arab Emirates have pulled out of the coalition with the Saudis in attacking the Houthis. And, you know, there's also an article which I'll put up on in the show notes in the Asia Times that this is going to embolden the Houthis. This is going to embolden, you know, the 20% of the population, that minority, the Shiite minority in Saudi Arabia that's persecuted. So I'm not going to get into all these machinations, but all this stuff does come into play. And so what does it really mean? It means that fourth generation warfare as being practiced by these Houthis exposes the fragility of Saudi oil supply. You know, Saudi Arabia, you know, the United States is the largest oil producer now, but Saudi Arabia is the largest oil exporter. And now it's being exposed as being basically at risk. It's a paper tiger. You can take out their supply, you can take out the 5% of the world's supply with drones. And the fact that the market doesn't seem to be as concerned about this as I am, I guess, you know, it's again, they don't see it as an issue. I do. Now, if the Saudis are going to continue to be at war with the Yemenis or the Houthis in Yemen, this is going to continue. And one of the things that was brought up is why not the Houthis just move into Saudi Arabia and try to take the oil fields with support from Iran? This is a possibility. And look at what I find fascinating is look at the response by the Trump administration. Trump administration pulled out of the Iran deal. I'm not going to get into whether that was a good thing or bad thing. They put all these sanctions on Iran. Iran is being economically crushed by these sanctions, and you know they are fully prepared to push this also. You know, there's been no response. That's going to send a message. That's going to be interpreted as weakness. That's going to encourage further incursions, further attacks, push the boundaries. And so what is the Trump administration going to do except for send out tweets and thump their chests and talk big? Are we going to attack? I mean, I'm surprised there hasn't been a retaliatory attack. The Saudis certainly aren't going to do it on their own. They're incapable. Their military is a joke. They buy a lot of hardware. And from some of the articles that I read from former U.S. military attachés that actually served alongside or in Saudi Arabia, they said the Saudis are a joke. They'll literally, well, it's coming up on the weekend, turn off everything, let's go home for the weekend. I mean, they literally just shut off the air defenses and the radars and detection devices and go home. That sounds ridiculous, but that's what I've read. So the Saudis have spent billions of dollars on defense and could not stop a drone attack. Are modern weapon systems obsolete when facing fourth generation warfare? Yes. You know, I've been waiting for this. You know, the United States has got their carriers and their amphibious, you know, support ships, and they're cruising around the Gulf thumping their chests. But, you know, the Iranians have Russian-made Sunburn missiles. They cannot be stopped. Anti-ship missiles. You know, I've put forth the scenario before of if you get into a shooting, you know, messing around with Iran is not like screwing around in Syria or in Iraq or Afghanistan. You know, Iran is a serious country that's been around for over 1,000 years. The population is very large. Even though the economy has been decimated by sanctions, it's still a legitimate country. And, you know, you're hunting big game now. This is not, you know, going around squirrel hunting. And if the Saudis were to initiate an attack, let's say on Karg Island, which is the Iranian oil loading facilities in the Persian Gulf, primarily where most of their exports go through, they could easily bomb that place and blow it up. Maybe not easily, but they could do it. And the U.S. could easily do it. But then what? The Iranians would certainly respond from Iran. They would be shooting rockets and missiles all into Saudi Arabia. They would shut the Persian Gulf down. You would have no exports from the UAE, Kuwait, Iraq. You would have, you know, proxies in Syria and in Iraq and Afghanistan and Hezbollah and who knows what. They would turn all of these proxies on to create confusion, create more attacks around and force, it'd be like playing that pop-up gopher machine game at the arcade. And what would Trump do? Oil prices would go to about $150 a barrel, $200 a barrel, and gas would be $6 or $7 a gallon going into an election. Yeah, Trump's going to sit there and tweet and pound his chest. What response? But now you've emboldened these people. They said, hey, our attacks are getting more sophisticated. Our technology, our ability to go after these facilities is getting better and better. Nobody's responding. Nobody's doing anything. The Saudis aren't pulling out of Yemen. We're going to continue the attacks. We're going to increase our attacks. We're going to, if I'm being attacked by the Saudis, I'm going to keep attacking them. And so what I think this does is, there's a lot of things going on here. You have the Saudi Aramco IPO. They want that. That's why I think the Saudis have put this brave face in all the press conferences. They're bringing people into the facilities. I used to work at a refinery. I wrote an article this week. And I was at the Texas City refinery when it exploded in 2005. And I can tell you it takes more than a week or two just to fix something after it blows up in a refinery. I mean, I saw a picture or some video that the Saudis had some correspondents, allowed some news people in, and these towers were all shot up. Those are not something you just, weld a patch on. Those are constructed in South Korea or Japan or the United States, and then they have to be shipped over to Saudi Arabia, unloaded, taken to the facility, erected, connected, and then commissioned. That doesn't take 2 weeks. So I'm not saying that the Saudis are going to be offline with 5 million barrels for months, but some of these repairs are going to take longer than most people think. Now, they can shift around things, but I still think there's going to be an effect to their ability to supply for some time. Now, I may be wrong, but what I saw, I mean, if you have fires in those areas after the explosions, you're going to have all kinds of instrumentation that's destroyed. You have to rerun all that fiber, all that cable, put all those instruments back in. You have piping and pipe supports and pillars that have been weakened and fatigued, if not destroyed by the heat. They have to be cut back. You have to do certain analysis. Then you have to come back and fabricate that pipe. It's not just sitting around. It's sometimes specially rolled and fabricated off-site and shipped. That takes time. So then you have to reconnect everything. You have to rerun everything, rebuild everything. And what's not to say you're going to have subsequent attacks while you're doing this? So I think that what it shows is the vulnerability, and I think that over time, and we will see more attacks. I don't know the timing, but we will see, because these people are emboldened now, and they are at war. And it's time for people to wake up. But the House of Saud, this has been something that people have speculated about for a long time. It's a paper tiger. It's supported by the U.S. basically, and the U.S. at this time, or this administration that's coming into an election year and actually thinks that, we're oil independent now, thinks that, well, we don't have to get involved in this. Or, Pompeo was talking big originally, but then when he went to Saudi Arabia, he kind of pulled back on some of his rhetoric. And every day that goes by without a response further emboldens whoever did this to do it again and at a higher level. And I think what it does for us is that the value of secure oil supplies, i.e. Canada, oil sands, offshore Gulf of Mexico, things like this, these things have to be revalued higher because oil is the lifeblood of civilization. Boom, 5% of the world's supply taken offline with a drone attack. That's interesting. And what's to say that other facilities around the world couldn't be attacked now? Not just in the Middle East, not just in Saudi Arabia. So I don't know what's going to happen. I do know that this really kind of raises the stakes, and it kind of shows, something that a lot of commentators or smart people have talked about for a while. A couple things. The House of Saud basically is at risk, in my view. And also, all of this trillions of dollars spent on these advanced weapon systems can be undone with drones and low cost, high tech, basically. 4th generation asymmetrical, very little investment and able to give you a large gain. And that's what we saw. And if you're interested in understanding this, because people have been writing about this that know what they're talking about, is, like I said, William Lind and Martin Van Cleveland, who's an Israeli military commentator. So I think that this remains to be seen what's going to happen, but I think it's something to keep in mind. And, I don't think this attack came directly from Iran. I mean, Iran is not, I'm not sure that, I think they might be emboldened now to increase some of their activities because the U.S. simply isn't going to do anything. I mean, this president wants to get reelected, and he cannot have $7 a gallon gasoline. Oil is fungible. If you take 5 to 10% of the world's oil offline, or God forbid, if you get into a shooting war with Iran and the Gulf gets shut down, then oil will be $200 a barrel. You'll have a massive depression, and a lot of people will be upset. It's an interesting article that happened this week. I think it got missed by a lot of people, or not just an article, but a event, if you will. And what it was a big sell-off in growth stocks and a big upswing in value stocks. And value stocks is something that we're kind of involved with in the Actionable Intelligence Alert newsletter. We look for contrarian, beaten down, value-type propositions. We stay away from all the high-flying growth stocks and the unicorns. But this was a quote from a Barron's article. This is something that's only occurred, this type of swing between momentum or between value and growth, that's only happened like once in the last 10 years. And it says, it used to be that stocks that got too expensive would eventually sell off, and the stocks that sold off too far would rebound. But over the past decade, pricey momentum stocks have gotten pricier, and value stocks have stained the carpet, or stayed down or got crushed. Then, during the first days of this past week, momentum stocks sold off by 10%, and value stocks rallied 7%, according to JP Morgan. That was one of the sharpest 3-day shifts in 30 years. And I think that that's what we're seeing. We're seeing a shift in, value has been out of favor for years. Growth and go growth. We've seen these cycles before, the Nifty 50 back in the 60s and 70s, the tech bubble, and the current manifestation of the sales only, no profits, no cash flow unicorns. And my personal view is that the WeWork busted IPO that happened this week, where this sham company, this grifter CEO exposed, and that the IPO had to be shelved. And I think that was the top of the money for nothing, chicks for free, no earnings or cash flow unicorn market. I've said this before. I do dabble in angel investing and supporting founders of kind of unique companies. And I've seen this, it kind of went from let's find a good idea and try to get this, market or disruptive market, to this idea of grow your sales no matter what, because we want to put a 10 times valuation on that and get it to become a unicorn. So, if you have 10 million in sales, we want you to get to 100 million so we can put a $1 billion valuation on this company, then take it public. Who cares about profits? Make the sales increase, the profits will come later. Haven't we heard this? Uber, Lyft, Beyond Meat, these type of companies. They don't make any money. They have multi-billion dollar valuations. And it's always a come bet. It's on the come. And I think that the mentality is sinking in now that that's not going anywhere. Why am I paying 100 times sales, or in some of these stupid pot stocks 200 or 300 times sales for something that doesn't have any profits or cash flow or any visibility towards that? It's just burning cash. Tesla, Uber. I use Uber. I like it. It's great. It's burning cash. Lyft, all these type of companies. And this WeWork thing finally just blew up. It said, after all the nonsense of people parsing this in the press and various analysts, it comes out this thing's just a big sham, scam. And at some point, there's always a top in these theme markets, if you will. And then if something pricks the bubble, something is the apogee, something is the pinnacle or the crescendo, and I believe this is it. And I do think it makes sense to, reflect on the fact that, this shift between value and momentum or growth, this was the sharpest shift in 30 years. I think that's significant. I think that makes us have to sit up. Am I calling the top? Am I calling the bottom in value stocks? No, but I have seen more strength in a lot of the stocks that we're following. It seems like money is starting to come into some of these things. And I think that, if the market and these growth stocks or momentum stocks is topping, then we will see a general market decline, or at least a stagnation in these type of stocks. And people will start gravitating and moving towards our side of the canoe. So I think I wanted to point this out just because I thought it was interesting. We've been waiting for this. It's kind of this, I kind of got onto this whole value contrarian kick, and it's just kind of like not went anywhere for me, right? It's like not playing out. The newsletter, about half the stocks are not performing at all. They're terrible, and I think that's getting ready to change. Wanted to point this out. Obviously, the big news: Fed cuts rates again this week, and look, gold's still hanging in around $1,500 an ounce. It's massively overbought. Even still, it's trying to do some work to consolidate and digest this massive gain that you see here. But what I think is interesting is that if you go back to this time last year, which is, this time frame here where gold was selling around $1,200 an ounce, we're now at $1,500. We spent a large amount of time above that $1,200 an ounce. And what I think is going to be interesting is watching the Q3 and Q4 year-over-year numbers and the increases in sales and earnings that are probably going to start showing up in some of these producing gold stocks. These gold mining and mining in general is a very, very leveraged business. I mean, that's why I like it. If you get a price rise, once you cover your costs, all of that additional revenue goes to the bottom line. And you can see some massive increases in earnings and cash flow that will start showing up on screens, and I think analyst screens, and start drawing capital to this market. What do I mean? Say you're mining, let's just say for an example, that you're running a mining company and you have a million ounces of annual production. So, and it's costing you all in $1,200 an ounce. So you were breaking even last year. Okay, let's just, for this exercise. So you have 1 million ounces, you're breaking even at $1,200. But over time, over the last year, your price for gold now has went to, let's say, $1,500 an ounce. Now, it didn't just go from 12. It's obviously stair-stepped its way up here, but for the illustrative purposes. So now you were breaking even at 1,200. You're now at 1,500. You're having a million ounces of production. Now you've just got $300 million in profits. Or what if you were, gold was 1,200 and your production cost was, let's say, 1,100. You were making 100 million in earnings at 1,200. Now you're making 300 million. You've just went up like 150 or 200% in your earnings. That's what I'm talking about, the leverage. And I think that's going to start showing up in the Q3, Q4 earnings reports of a lot of these operating mining companies. And I think that's going to start, drawing eyeballs and interest from the general investment community. At least that's my theory. Want to talk about nickel. This is the London Metals Exchange nickel warehouse stock levels. You can see for the last 5 years how the stock inventory has declined. Now, obviously, this isn't the whole nickel story on inventory, but why this is important is I want to point out again the fact that the Indonesian government announced a couple weeks ago that they were moving forward by a couple years their moratorium on nickel exports from their country. Now, this makes a lot of sense because I believe Indonesia is the largest, if not the largest, or one of the largest exporters of nickel. So basically, on 1/1/2020, you can no longer just export nickel or from Indonesia. You have to refine it and process it in Indonesia. And that makes sense, right? The Indonesian government doesn't want to be just used as some kind of, you come in here and mine all of our nickel out of here at cheap money and then ship it back to China and process it there. No, you're going to process it here. You're going to invest here. You're going to employ Indonesians. See, this is more of this nationalism I've been talking about, this resource nationalism, this nationalism. No, you're not going to do that. And we have the leverage to make you do it. So what are people going to do? Well, we'll just go somewhere else and buy our nickel. Where else are you going to go? So I think that, the nickel price is going to go up because of this. People weren't anticipating this. This is kind of like a black swan. And inventories are already low. Demand is increasing. It's the same situation in nickel that we have in a lot of other commodities. There hasn't been enough investment. And now we have this artificial supply constraint that's been placed on the market. And we can see a move substantially higher as inventories are already low. And even if you were to have a worldwide recession, if the supply of nickel is falling faster than the demand, the price will still go up. That can happen. And that's going to happen, I think, in a lot of these markets because there's been a tremendous amount of underinvestment. I'm going to go ahead and give you a freebie here. This company doesn't really fit into what I'm trying to do in the newsletter, but I still have a position in this company. This is my nickel play that I'm on. It's an Australian-based company. It's called Independence Group. You can go look them up on their website. They have an operating nickel mine that they just coincidentally brought online over the last few quarters. It's doing tremendously. As you can see, record revenue, record underlying EBITDA and cash flow. Its net profits were up 44%, and that's before we've had this big move in the nickel price. The Independence Group company also has a joint venture 50-50 with Ashanti Gold, I believe, in Australia, in a gold mine that's producing like, I believe 150,000 ounces a year or something. I can't remember, but they have a gold kicker, let's say, because they have that operating gold mine in Australia also. So that's a freebie for you out there. This is not something that's going to go up 10 times, but this could easily double over the next year if the nickel prices take off. Something you may want to look at if you are interested in playing the nickel market, diversifying your portfolio. I get a lot of people asking me, John, isn't there enough stocks in the U.S. to buy? See, this is the mentality I don't like. I can sit here in my home office, which I'm making this video from, and I can literally invest all over the world via my computer. Why would I not take advantage of these opportunities? And I can't get my head wrapped around that mindset, where somebody actually wrote me that and said that. Aren't there enough companies in the U.S.? And it was said in a very sarcastic mode. I guess for you there are, but there's a tremendous amount of opportunities around the world. See my article about Uzbekistan on the website, where you can buy stocks that are, selling at, 4 or 5 times earnings and have, 15 to 20% dividend yields. Make the world your oyster, guys. The internet allows you to connect with everybody else in the world. It allows you access to all these other markets. You can get on a plane and go anywhere in the world in coach at least, for probably $1,500 to $2,000 at most. Instead of taking a vacation to, Pensacola or, I don't know, Delray Beach, Florida, get on a plane and go to Tashkent. Get on a plane and go to Ukraine, go to Kiev. Get on a plane and go to, Russia. To make the world your oyster. Make connections. Expand your thinking. Last but not least, Brandon Munro. He was on Palisade Radio. I think it's a pretty good interview. He talks about many things. He talks about the WNA Symposium. He talks about SMR technology being something that is probably going to end up driving a lot of the growth in uranium demand over the next several decades, as it becomes obvious that wind and solar intermittent power is not going to be the solution to climate change. What I thought was very interesting, near the end of the interview, he starts discussing about consolidation in the uranium business and possible takeover targets. And he goes through the litany of why you're not going to see foreign ownership of uranium assets in the United States, Canada, and Australia. But where will you see it? In Africa. And that's some theme that I have been on myself. Chinese and Indians have a tremendous demand for uranium, and some of the only governments that will play ball and allow them to take ownership of these assets will be in Africa. So I thought it was an excellent interview. I'll put a link to it in the show notes, and I suggest you it's like 25 minutes. I think this guy's one of the smartest guys in the uranium market. So that's it for this week, guys. Thanks for the support. Thanks for listening. Look forward to seeing you in the comments. Keep on listening, and we'll try to keep delivering this quality content to you. Talk to you next week. Thank you.